Here is more tax information now from the offices of Manjit Singh CPA PC.
Good morning, ladies and gentlemen. My name is Kusum Ramachandran. I'm from Manjit Singh CPA PC in Falls Church, and now in Ashburn and Manassas. And this morning, Mr. Singh is here with me, and we are going to talk about employee business expenses, since everybody is now trying to wrap up their taxes and get everything filed by April 17th, which is the deadline for filing for 2011 tax returns. Morning, Mr. Singh.
Good morning, Kusum, and thank you for the nice introduction. Yes, folks, as we are getting along into the crunch time, there are questions. People are calling and asking if the government where they work or their place of employment where they work, they don't have space, and the government is encouraging people to do telecommuting. What kind of expenses they have available to claim on their personal income tax return. From the old days, old rules that I remember, when you are working out of home, we used to request our taxpayers, clients and the taxpayers were requested to have a letter that it is for the convenience of the employer that he's encouraging you to work from home. Correct, Kusum?
Mm-hmm.
Thank you. And so now the question comes up is, what are the expenses that are deductible as employee expenses? Claiming office at home expenses when you are doing it on a temporary basis for 2 or 3 days, I thought it was acceptable, but Kusum here suggests that it may not be, because the law specifically requires that the office at home deduction needs to be exclusive use. So if you're working 3 days or 2 days out of the 5-day week, you are not doing an exclusive use. You're gonna probably be staying at home 1 day a week and probably sitting in your dining room and answering the phone or taking a conference call and things like that. So office at home deductions for individuals doing telecommuting may not be a kosher deduction. Will it pass the IRS test? Doubtful. I would say if the IRS agent wants to look the other way, maybe. But if the IRS agent is somebody new out of college and is strictly going by the book, no. Any thoughts, Kusum?
Yes, the main thing is that you should be itemizing your deductions, and that these expenses should add up to more than 2% of your adjusted gross income, and it rarely does. If you want to deduct, for example, the use of your BlackBerry or your cell phone, most of those are employer provided anyway, and they're not a taxable fringe benefit, so you're not going to get a break on that. However, if you do pay for it yourself and you try to deduct that, you could, but if it doesn't exceed 2% of your total income, you're not going to get much of a benefit from that anyway. For employees to qualify for deductions of this nature, unreimbursed expenses, the key is, first of all, that they should not be reimbursed, and that rarely happens in this day and age. Most employees would want to be reimbursed for their business expenses if they had business travel, business meals, business seminars, conferences, and what have you. But however, if you don't get reimbursed, then of course that would be something that you would claim. You would put it on Form 2106. It would carry over, the excess amount would carry over to your Schedule A, and you would get the benefit of that. I should also mention that it is one of the alternate minimum tax triggers. So a lot of times people think that they will get a tax benefit out of these deductions, but more often than not, they find, especially in this area where incomes are high and taxes are high, and there's a lot of state tax and real estate tax, which is already triggering alternate minimum tax, then the unreimbursed employee business expenses only just add to that, so that the total amount of tax remains a constant. You lower your regular tax, you increase your alternate minimum tax, the only difference you make is to your state tax return. Any thoughts?
Yes, certainly. Since you mentioned about the plans, unreimbursed employee expenses, something crossed my mind when you were talking about that, and that was,
No.
yes, and that was if it is for the convenience of the employer, maybe the employee should encourage the employer to have an accountable plan.
That's very correct, and most of the employers do.
And if the employer has an accountable plan, the employee is going to give a report, an expense sheet, and give it to the employer, and the employer is going to give you cash out of the accounts payable system versus your payroll system, and therefore the amount is not included on your W-2, and therefore the amount is that you received as a separate check is not subject to income taxes, and therefore whatever we just talked about becomes useless.
But everybody always, nevertheless, tries, and there are situations do exist where it does add up and where the people do it. There are traveling salesmen, there are statutory employees, people like that. These expenses will count. Also,
Well,
if you're a sole proprietor and take business use of home, that's an entirely different story.
Well, folks, with this kind of information today, I would like to wrap it up since we have only 4 weekends left. And for the next weekend, I would like to talk to you about something similar to this, where an employee is trying to claim clothing expenses. So this is Manjit. Till next week.
And I'm Kusum. Thank you for watching.